Hi everybody, Jeff Yastine here. You know, most investors are still quite understandably focused on the sort of slow motion meltdown that we've had on Wall Street in recent weeks, but they're missing a great opportunity and an important all clear signal that was handed out last week amidst the carnage on Wall Street. That opportunity is the chance to buy retail stocks at a discount ahead of the year-end holidays, and the all clear signal comes to us from an unlikely source, Moody's Investors Service. This is the company that does ratings on bonds and looks at companies for their likelihood of going bankrupt and defaulting on their bonds. Now, I've been telling you to buy retail ETFs like SPDR, S&P Retail, the symbol is XRT, for more than a year. The whole death of retail thing, in my view, was way overhyped. It's still way overhyped. Retailer stocks were too cheap then. They're still too cheap now. Americans' wage and employment gains made retailers, in my view, a screaming buy. And since then, as you can see from the chart, the fund is up nearly 10%. The individual stocks I've recommended to subscribers in the Total Wealth Insider model portfolio are up more than triple that amount, with plenty left to go. So last week, when Moody's said that it had changed its outlook on America's retail sector to positive, and that's the first time we've seen that happen since 2015, I take that as an important confirmation, though a late one, of this trend. Best of all, latecomers now have a second chance to buy into this sector at a discount thanks to the market sell-off we've seen in recent weeks. That has knocked down the prices of most stocks, individual stocks in the sector, by at least 10%, and the same can be said for the ETFs as well. The background fundamentals, the overall fundamentals here, still have not changed. The National Retail Federation expects Americans' holiday spending to hit around $717 billion this year and to rise by as much as 4.8% compared to the year ago holiday shopping season. And best of all, I think we will soon see this investing theme of the last 2 to 3 years. The idea of a retail Armageddon, the death of retail, all that I believe is going to go away. And with it, we will soon see higher valuations for most retail stocks, higher than what we've seen over the last 2 to 3 years as this other investing theme played itself out. And I think some of that we're already seeing in the marketplace now. How else do you explain why Walmart shares are up 20% since the end of June, while Amazon shares are down more than 8% over the same time period? At the same time, we have great material coming in from like the Commerce Department, which said with its latest estimates that second quarter GDP came in at an annualized rate of around 3.5%. That's even with the ongoing trade tariffs from the Trump administration. Meanwhile, consumer spending jumped 4%. And that's the strongest such quarterly growth rate for that metric over the last 4 years. So things actually look good here going into the fourth quarter. With spending like that, the holiday period ought to be very kind indeed for retailers, and it should be even better for investors who buy these stocks while they're on sale now. Remember to keep liking us on our Banyan Hill page as well as on Facebook and on YouTube. I'm Jeff Yastine.